Welcome to It's Economy. NBFC stocks like Shriram Finance, Bajaj Finance, Chola have all been the best performing stocks, rising 40 to 46% this year, while the newly restructured Piramal Finance has jumped over 20% in just this month of November after the relisting. Rating agency Crisil has just published its NBFC outlook for the next 2 years, and it states that it sees the sector's loan growth at a decent 18 to 19% for the current year and the next year. To get a firmer understanding of this very buzzing sector, I'm joined by two experts, Sitaraman, the Chief Ratings Officer of Crisil and I think the author of the report, and Jairam Sridharan, Managing Director and CEO of Piramal Finance. Gentlemen, good morning and thank you very much for joining us. Krishnan, since it's your report, I'm starting with you. Tell us exactly the growth trajectory. I read the headline saying 18 to 19% growth, but what was it last year? Should we be very thrilled with this 18-19?
Hey, good morning, Latha. Thank you very much for having me on the show. Good morning, Jairam, and good morning to your viewers. In fact, this article report that we have put out, we're talking about an 18 to 19% AUM growth for the NBFC sector. And that is across this fiscal and next fiscal. What we need to keep in mind is that decadal growth for the NBFC AUMs have been around 14%. And if I look at the last fiscal, it was, that is FY25, it was 18%. However, the first half of this fiscal had seen some slowdown in the growth as bank lending became a little more cautious. However, the policy measures that the government has announced, the GST rationalization, the lower interest rate regime, benign inflation, and the income tax cuts, which we saw at the beginning of the year, and also the healthy monsoons, has revised our estimates on the growth slightly upwards. We believe all these factors would drive consumption demand, and that would help retail credit growth. And that would help the overall second half growth be better than the first half growth for NBFCs, resulting in a roughly 18 to 19% AUM growth. Okay. And that would be led largely by the segments like loan against property, gold loans, and the secured asset classes. Okay. Unsecured and the MFI may see a subdued.
Okay, got that. That's by way of initial comments. Good morning, Jairam. You all did far better than that 18% that Krishnan is talking about. 25%, right? Total AUM growth for the second quarter itself. What's your sense? This is still September. We haven't seen the festival season into those numbers. Your growth forecast for the next, say, 18 months.
Yeah, thanks, Latha, for having me. The growth has been very strong in the first half. The festive season, it has been the biggest festive season I remember in a very, very long time. It has been really, really strong. A lot of us have shown our festive season numbers at Piramal. We said that the festive period, which is the 30 days surrounding Diwali and Dussehra, that period, our disbursement growth was 45% over last year, which is far and away the largest festive season I remember seeing, actually, in many years. So festive has been super strong. Having said that, the post-festive season has come off a little bit. It is not nearly as strong. So in our case, for example, the post-festive season, the 1 month after that, is looking more like 24%. Still very strong in absolute terms, mid-20s. So quite strong indeed. However, not as strong as what the festive season would have led you to believe. So it has been a very good start to Q3 for the NBFC sector overall. As Krishnan pointed out, it's led by the secured segments. LAP is doing extraordinarily well. It continues to really rock on growth. I'm sure we'll talk about asset quality in a few moments. Yes. It's doing very well. Yields and margins are also holding up. So it's been a really strong H1 for the sector as a whole, and followed by a good solid kind of month and a half. And as NBFCs grow and PSUs grow, there's been a little bit of shift away from private banks in these last year and a half. So that's been kind of the trend in the market so far.
Okay, as you said, asset quality. Krishnan, any worries at all in any sector?
Yeah, so I think what we need to keep in mind is NBFC is an agglomeration of different kinds of segments and sectors. So one view may not be applicable for all these segments. So on the whole, I would say that while we are expecting some uptick in delinquencies, it is not a major cause for concern.
In which sector are you all expecting?
Yes. See, I would say that across the board, there would be some marginal inch up in delinquencies. That said, we are seeing the unsecured segment showing a higher increase in delinquency. Segments like microfinance, unsecured personal loans. Over the last 1 year, we have seen issues, headwinds facing these sectors, and we have seen the delinquencies go up. And one of the key reasons that we have identified is customer over leveraging, and that has caused problems in the repayment ability of these customers, and that has resulted in delinquencies going up. Those sectors are still under watch. Additionally, in the small ticket business loans, that is another segment that we have seen in the recent quarters, some uptick in delinquency. So we are keeping a watch on it. These sectors have overlapped with the small ticket, the microfinance segment. So the issues that will affect those sectors may be somewhat similar. So these are some of the sectors, but they don't contribute a significant chunk to the overall NBFC.
Got that. Let me get Jairam on this. Jairam, you have the distinction of, pointing out to the unsecured loan problem, I think even ahead of the regulator in one of those CNBC events, remember. Now, what Krishnan is pointing out to is something we saw even, Bajaj Finance showed MSME loans as a problem. There were a couple of others, if I remember right. Would you say that there is any developing pocket of worry?
Yes. I think the unsecured lending story has largely played out. I think it is, and you can see it in the delinquency numbers, which have been very not come down, but they have not moved up in the last 9 months. They have been pretty much at the same level. So that's holding up okay. My emerging pocket of concern, Latha, is the one segment which is also, as we discussed in the previous section, the fastest growing, which is LAP. Okay. It's an area I want to kind of take a lot more of a close look at. I think the problems have a risk of spilling over into the LAP segment, particularly the smaller LAP segment, which already seems slightly impacted. And the problems might move up the ticket size curve. As you know, in this entire cycle, the smallest tickets are the ones that have been badly affected, but the larger tickets have been mostly unscathed. My anxiety building up right now is just to make sure that the lab business, which looks so great right now, fantastic growth, great margins, superb risk, everything looks good about that segment. I wonder whether it is too good to be true and whether something is going to give there.
Fair point. Spoken like a true banker. Just one number, which you probably said and I didn't note. You said that post festive season, it is about 24%, which you described as moderate by your standards. What was the festive season growth?
Ours was 45%.
Ooh, okay. And what would your annual average be, say, for the next 12 months or so?
I would say right now it's looking like 26-ish% for us. We have not guided specifically for the next year, but looking at what I'm seeing right now, I would say about 26 seems doable. I'm encouraged by what Krishnan is saying. If he thinks the industry is going to grow at 19, I better grow at 26. Okay.
No, I'll tell you why I was a little skeptical and I asked you this number, because both Chola and Bajaj Finance brought down their AUM growth forecast by about 1 percentage point. It was a range. So it's good to hear that if that is not the industry-wide experience. But this again was before festive season, so we can wait and see. Krishnan, running out of time, you want to add anything on LAP quickly? And do you think that NBFCs are struggling to get money from banks? That's what your note indicated.
So just coming back, in my earlier part, I still did indicate small ticket business loans. That is largely LAP. So as Jairam was pointing out, unsecured was always a watch point. But what is emerging is a small ticket business loan, which is largely LAP. And there we need to watch out for some uptick in delinquencies. So that's something which we need to look at. Another thing I wanted to add was in terms of this growth. We are seeing also a differentiation between the larger and the better rated NBFCs and the smaller and the more moderately rated NBFCs. So we are seeing the AAA and the AA rated NBFCs grow faster than the BBB and the single A rated NBFCs. Okay. And that one of the reasons there is the access to bank funding. So bank funding, if you would recall, a couple of years back was growing at 25% to the NBFC sector. That has considerably come down. And despite the risk weight reduction from April this year, we are just seeing only a marginal uptick in the bank exposure to the NBFC sector as of September, vis-a-vis last September. So that needs to pick up for the mid-size and smaller NBFCs to grow. The larger NBFCs have access to other sources of borrowings, like the debt capital markets, external commercial borrowings, and so on. So they would be able to source the funding and grow, even if the bank funding is not keeping pace.
Got it. I would assume Piramal would fall in the category of the, the better off NBFCs. Jairam, your word on cost of funds. Are banks still being stingy? And more importantly, the RBI has opened out some doors. They're only draft rules, but easier ECB funding is on the way. On the other hand, the debt market has stopped reflecting what the Reserve Bank is doing by way of cutting rates. We have, if anything, seen a slight rise in yields and spreads. Cost of funds for the next 12 months and therefore margins.
I think cost of funds are headed down, and you will see it continue to head down over the next full year for NBFCs. The trend for NBFCs might be different. Will be different than the trend for banks. Banks will probably see margin compression. NBFCs will probably see margin expansion in this period. We saw it the last cycle as well when RBI was increasing rates. If you look at NBFC data and you look at when cost of funds for NBFCs actually increased, you will see that there was a 1-year lag between when RBI was increasing and when it was reflecting in NBFC P&Ls. The same will happen on the way down. There is about a 1-year lag. RBI started in February, March last year or this year. So I expect starting Q4 more to be visible on NBFC balance sheets, but you should expect to see it. Yes, banks cutting MCLRs has not happened very much, particularly in PSU banks. Private sector banks have still cut a little bit. PSU banks have not cut MCLR at all. And since they are pretty substantial parts of the market, you're not actually seeing that impact coming through. The bond markets, the low end obviously has reacted really well, and you've seen the rates, and they've baked in all the cuts that have happened. The high end remains, the long end remains stubbornly high, and it is not moving, and that does make for an area of anxiety. It does show a little bit of a lack of confidence of the market in what's going to happen in the long run, and whether RBI is going to be able to solve the longer term kind of liquidity issues. In the short term, though, liquidity is ample, and costs are benign and on the way down.
And so your margins will be? Any guidance?
So I would say that last quarter you saw our cost of funds come down by about 20 odd basis points, cost of borrowing. I expect another 25 odd basis points reduction in cost of borrowing by the end of this fiscal year, and another kind of 30 odd basis points in the coming.
Okay. Oh, that brings you to double digits in NIMs, actually. Even the last one, you reported 9.55. So that's very good going if it is 26% loan growth and over 10% margins for at least the top-notch NBFCs. Krishnan and Jairam, according to me, are the more cautious people in this space. And if they are telling you that things are looking reasonably good, and in fact, Jairam is saying it's looking very, very good, then perhaps the rally we saw in NBFC stocks this year may not be the best of the rally. Maybe more to come. Thank you very much, Krishnan and Jairam, for joining us with a comprehensive understanding of the NBFC space. Wrap up on Bazaar. Chart Busters coming up.